Hello, welcome back to another video. I'm not gonna take too much time today. I'm just gonna be quick. I'm looking at these two pairs, the Australian dollar and the New Zealand dollar. Okay, so what I'm looking for this week is a run above this high, and then I'll start looking for possible reversal to the downside, right? So I'm looking for a run above this high. I'm looking for a run above this high and then a rejection, and then come back down here. That's something I'm watching for this week. Okay, so that's the Aussie dollar. On the New Zealand dollar, same scenario. I'm looking for a run up and then run down, okay, to these two lows here. Alright, so that's something I'm looking for. I'm looking forward to this week. I'm watching closely to see if I see any signs of rejection. Once we go above this high, then I'll be interested in a short to come back down. I think that's it. These are the two pairs I'm watching closely this week. Okay, this is a short review. I mean, this is the shortest I've ever done, but I'm not gonna end here because I've got a few things I want to share, which is the swing high, swing low strategy that I shared on YouTube. Okay, I'm gonna give examples of what I did with it last week. Okay, so the first one I did was this pair here. Right, so we have, let's zoom in there. Okay, so we had the market on Thursday form a possible swing high. So we have a high, a higher high, and then on Friday I was watching this candle's close. As usual, you watch that candle's close. So that candle close comes in at 97.287. So we change that one to 97.287. Click OK. So that's the level we're watching. So what I was doing was I was watching the 1 hour time frame to see when we do close below it. So right here we have that close. Yeah, so once this closes below, then we have the opportunity to go in and start looking for possible sell scenarios. So once price closed below this line here, we go in and start looking for shorts. Alright, so we did get a nice one here, which I'm going to drop the Fibonacci to see our target, because once we get the close, then you start measuring where price should drop to. So the strategy is, okay, price should drop to 50%, right? So that's the level we're looking at. So if you want to apply the filters that I gave the last time, you can do so right here. Yeah, so you can I use the BB percentage, and I'm looking for a divergence. Okay, so I'm looking for a divergence on the 15 minutes, or I can use the 5 minutes, whichever one you want. Okay, so in here that's where we closed below. We came back to the same level, dropped down, and then we popped once again above this high. So we made a high here, and this thing made a lower low. And I've got two of them on there. Yeah, this thing made a lower low. So right there and then, right here, you go short, expecting price to run down to your target, which is that 50% right there. So this, if you shorted, let's say you use the Fibonacci, it would have gone above the 0. This is what I mean. So if you use the Fibonacci, it would have gone above the 1% level, which is not what you want. Okay, so this case is a case, in this scenario is a case of looking for signs of bearishness. We did get one here, right, from this high to that low. Right, we did get a 79% retracement level, and then we went down, and then we came back up again to the same level, this time running the stops on that high, just like that, and then we sank down. Okay, so that's one possible example of how to use the strategy. Okay, another thing you could have done is, when this went down and closed below, on the next retest you can just go short. Okay, on the next retest you can go short and then find a swing high here to place your stop, or you can just go with a fixed figure. So let's say you go short here and you tell yourself you're going to give yourself 15 pips or 20 pips as your stop loss. So you put this line and you place 20 pips above it, which is right there. So you can say, okay, I'm going to place a 20 pip stop loss right there, and your target is always fixed. So your target would be 42 pips. Yeah, so you go 20 pips, 42 pips, that's nice, 2 to 1, and then that's it. That's the end of your trade. You don't do anything else. Alright, so let's look at another example that I did. Again, this time it was a long. Right, let's go back to daily and let's zoom in. Let's get rid of this first. We'll add it back on later. So we had 1, 2, and then 3. So when this candle, find the high of this candle, which is 109.26. So I'm going to place a line for 109.26. okay, and then click OK. So we are looking for a close on the hourly candle above this line. So if I drop down to the 15 minutes, this thing is powerful if you spend time to actually study it. Okay, let's look on the 1 hour first and see when we did close above it. So in here we closed above it, right? That's the level there. Okay, right there we closed above it. So once we close above it, what are you looking for? You are looking for bearishness, anything that will give you signs of bearishness. That's why I gave you the option to use anything that you will deem or which will give you a sign of bearishness, right? So what I use again is my BB. I'm looking for divergence in here, right here. Here is where I'm looking for the divergence. Alright, So let's look into and see. Before we do that, first of all, let's measure where price should go on the daily. So our swing high to our swing low is right there, and price should go to that level, and that's it. That's all the strategy is. Swing high, swing low, 50%. You're looking for price to go to this level. Alright, so if I drop back down to the 15 minutes, I actually used the 5 minutes, but yeah, let me drop down to the 5 minutes because that's the level, that's the time frame I used to get into the trade. So this is when we closed above it on the hourly candle. This is when we closed above it, and then the retest. Always look for that, because it's gonna do exactly the same thing like you saw on the dollar Swiss. It tends to retest that same level, this line here. It tends to retest it over and over and over again. So right there and then you can go long. Okay, you can go long right here. And again, anything that will give you a signs of bearishness, I have been doing it for some time, so I don't need anything because I trust it. I've backtested it, I trust it. So once price gets there, I'm buying it. Okay, so if you're going to use it, you just need to back test it. And then another entry is right here using the Fibonacci. Okay, right here, and then that's your target. So we basically got there this morning as I'm recording this video. Okay, so that's the buy example. So that's how it looks like on the daily, and I think I've got one more. Let's look at that one, which was the dollar index. So on the dollar index, okay, we had a 1, 2, and then on the third, which was on Friday, I was looking at. So let's look at the close on this candle. It's 99.84. So you put 99.84. Oh, sorry, that's not. The low is 99.81. Yeah, 0.81. Okay, so that's the level we're looking for price to close below the 1 hour time frame. So we did get the close right here. Okay, so before we go further, let's measure where price should drop to, as usual. Between that high, this is the level price should drop to. So just close that, come back to the 1 hour. We did hit it, but I want to drop down to the 15 minutes so you can see how price played. So we closed, yeah, we closed, came back, retest again, and then another run higher. So this is a run on stops, and this is where you get the divergence again. Right, I zoom in, you're gonna see price made a high. Oops, price made a high. Price made a high, and this made a low high. So right there and then, that's your sell. Okay, when you get this divergence, the trade is quicker than when you don't get a divergence. Why is that? because when they do run, yeah, so when they do run the stops, that's when the divergence occurs. Okay, so sometimes you will get caught up in this. The more you do it, the more you get it. Okay, you're not gonna get it straight away, so the divergence might probably stop you out, but that's exactly when you need to enter the trade. All right, so if you do get stopped out, like for example, we closed here, you take a short here, your stop is above there, and then you get stopped out. Okay, don't do that. What you're gonna do is give yourself some room, possibly, like I said, give yourself like a 20 pips stop loss, right? Give yourself 20 pips stop loss, and then your target is from this level to that's 33, which will usually get hit. Maybe if you take 10 trades using this strategy, maybe 1 or 2 will stop you out, but the rest should go to your TP, which is your take profit. I know it's not a lot of pips, but it is a very high probability strategy. Okay, so the divergence is something that is powerful when you do get it, but just bear in mind that it might throw you off and it might give you a signal probably we're gonna go up, which is not true. Okay, so that's another example of a trade that I was watching on Friday. I want to know in the comment section if you like the strategy. If you do like it, just let me know in the comment section, and then I'll share some more insight in price action on this particular strategy, or how you can make it even more powerful and expect certain things to happen. Okay, because there are certain things you need to know more. So if you like it, just give me a thumbs up, and then I'll share more insight on this strategy. Until then, I will catch up on Wednesday for a review, and I've got a new mic coming, a new microphone coming, so maybe you hear my voice properly as of the next video. Okay, thank you and take care.